Greetings all, Ben here, East West. Going to take a weekly dive into uranium. Thank you to everyone who's liked and subscribed to the videos I've been putting out. If you haven't done so already, then can you hit those buttons? Gives me a bit of a help. So without further ado, let's jump in. So not as much to look at this week. Obviously we've had a lower volume week here, and the market's just sort of consolidated, but we are still sitting at the balance point here on 10 Canson. So, you know, we haven't made any progress this week, a little bit of a down week, but you know, we're sort of holding some of the levels that we sort of looked at in prior videos. So one thing you can kind of do here is sometimes the tops of these clouds, when they're flat, they can provide good support areas, just on a general Ichimoku overlay, and so far that's held, but obviously we've got to see what goes. So just moving in here to the daily on URA. We have slipped below just on the daily. We're still above the cloud, so that, you know, we still look sort of in a bullish stance, but obviously this sort of area needs to be cleared or resolved one way or the other. So, you know, it's just been a flat week. There's just not much more to add, other than you can see that the volumes this week have been quite low, so the interest has sort of run out for now. So nothing's really changed from last week. We've held this area so far, but we haven't exactly pushed away very hard from it, have we? So this remains key, and obviously below this pivot here on the 4th of October remains quite key going forward, but we just don't have any resolution in price at the moment. Just in an Elliott sense, I am just hanging on to this for now. People might look at sort of this zone and think, well, how's this an impulse? Well, the only way I've really counted it just quickly is I think you can make this a 1 wave, a 2 wave, 3 wave, 4 wave, and a 5 wave up for an expanded leading diagonal. Okay, so not common, but this is obviously an impulsive rip. So that's just one way you can put it together. What's come beforehand, I'm back and forth over this a few times. This, I don't think, is a triangle per se because of this low. It's something's completed here, you know, basis what's happened here, but I putting it together is still a little bit tricky. But nonetheless, I know a lot of people don't like the Elliott sense of it, but you know, there is the possibility that this is 3 that we haven't made 4 yet, and we're going up for 5, or that this is 3 that we've got a small 4 here, and this is 5, and we're going to come down for a larger correction. So if we were going to come down for a larger correction, I'd be sort of thinking about you know, down towards this 50 area, 50%. Down towards here would be the common retracement zone, and that would take us back into here. I'm not anticipating that's going to happen, but naturally I can't rule it out. Obviously there's a fair bit of geopolitical tension out there at the moment, and that is going to weigh on risk somewhat. So I wouldn't like to see the market come down here, but if it did come down here in a sharp sort of 3-wave move, which, you know, is definitely a possibility at this stage, well, then I'd have to go back and revisit and say, yeah, okay, maybe the impulse is finished here. Does that mean that the overall run is finished? Well, I'm not so sure about that, but obviously can't rule it out. But just leaving all that aside and just looking at the bare basics, it's just this pivot in this area. I just want to see this hold. If this gives way, then, you know, the chances that we come down and test this sort of zone probably, you know, obviously increase a great deal. Not anticipating it, but can't rule it out. Just moving over to energy fuels, and obviously again a slightly lower volume week, but we are still just hanging on to the 10 Canson there, so we got balance. But same thing as last week, there is a bit of room to move down here. I'm hoping that's not the case, but you know, can't rule it out, of course. So yeah, I mean, at the moment there's nothing to really change the view, because, you know, obviously the same thing across them all. The week didn't really produce much to give us a clue as to what's going to happen next. But we're just at balance. The market's not running too hot now, just in the Ichimoku sense. But again, we've got to be cautious, because we know we've run pretty hot on the RSI, and things have turned over a little bit. So whether or not we gather for another rally, that's the next question. But yeah, as we said, it's okay. It's okay for now. Daily wise, obviously, after this sell-off, we've just sort of consolidated here. We've just chopped about. we're above the cloud, but we can see here that the lagging spans run into the candle. So you would hope that that would provide some sort of support for the market. That's generally how we read that, and we know that we've come into this zone here. So as it sits, it's okay. I don't want to see this cloud get broken, obviously. That's going to make me rethink my whole pitch about impulses finishing up here, that something completed up here. But we know that we got to some pretty good zones on a lot of the instruments. But at the moment, this is okay. I just don't want to see this slip any further. So nothing's really changed here, other than we are holding this little band here for the moment. But obviously, I want to see the market retake that and then come in and threaten these tops again. So we're not there yet. One thing of interest is I will say that someone pointed out in one of my videos I should fact check some of the things that I am putting up, which is very true. So this has not been fact checked, but I do see here that I don't know who this is. This some broker that's put a target of $9.50 on this, so that's quite high above the top here. So in future videos, depending on what happens here, I might map out how we might get to reach somewhere like $9.50. But for right now, we just don't have any resolution through here, so we just got to wait to see what this does. It hasn't bounced back as like if I was expecting a 3-wave down here, I'd expect a larger bounce back, but we haven't got that yet. But we just got to wait and see. I mean, it's like I said, the geopolitical situation could just weigh on risk, and that could just cause this to fall over. So we're not there. We're still here. It's just a light volume week. There's just not as much going on. I'm still maintaining this sort of count. It's not great. You can't make a leading diagonal out of this because the 3-wave is longer than the 5. So you sort of got to go 1 and this an A, a B, and a C for like a running flat for a 2, up for the 3, sharp 4, up for 5, 2, on and on we go. Like I said, at the moment I'm still hanging on to this as being a 4-wave, but if this gives way, I'd start to then think, well, no, we've got a completed impulse up here. I don't like the shape if that was a completed impulse, but I just have to deal with what the market's giving me. So for right now, it's still, those areas that have been highlighted in this pivot still remain the key, and we just didn't get enough this week to really make a case one way or the other for which way this might go. Moving on to Cameco now, and we're a little bit below, so we are just sort of sitting in no man's land here between the Tenkan-sen and the Kaizen-sen, but once again with the whole thing, that where the RSI sits is a little bit problematic because we are hot. So whether or not that is going to mean a deeper correction, I don't know. We've still got, this cloud's still going to support us. We're not near any sort of candle support in terms of the Chiku span, the lagging index, but it is another lighter volume week as the market just takes a bit of a break from the big rally that it had. So just zipping in here to the daily, and we are just hitting into that daily cloud. So you would, and you can see here that one thing is that the Chiku span's got onto the other side of these candles, which isn't perfect, but we've got this doji candle. This is about half an hour before the market shuts for the week, but you would expect this area to hold, and we know that we've got, that this could form up to be a little bit of a support area. So obviously it's the same thing again. When we just look at this in a simple perspective, we've got this band of support that we touched here. We're forming up another smaller one in here, but we just need to clear through here, and we're just not doing that yet. So I want to see things get going this week, because if they don't, well, I don't know. I wouldn't want it to spend too much time testing this, because the more it tests it, the more likely it is to break it. So that it remains clear, but because the week just didn't really produce much, I mean, all we really had was this, so there's not a lot there to go off. I'm still just running with the same sort of idea here as an Elliott count, but even just putting the Elliott aside, I think you can just sort of say we've got a nice trend here that's just being tested again, this channel. So obviously we don't want to see price fall out of this trend channel, because that is obviously not a good sign. We're holding it for now, and we've got, well, you could almost say we've got almost like well, it's not quite a triple bottom, but it's pretty damn close. So, that in itself isn't a bad sign that the market's just consolidating here. And you can just eyeball it up that we've got a bit of a zone of support sort of forming through here. But we need it to hold, state the obvious. So we'll just have to wait and see what the weekend brings. And that's the one caveat on all this. I mean, things could look vastly different on Monday morning, depending on what happens this weekend in the Middle East. So, caution, but as long as this holds, it's still okay. But yeah, I don't want to see this trend start to fail. It wouldn't be perfect. I'm still a bit betwixt and between in a cyclical sense, but this is still the leading candidate here for a cycle low. What I don't want to see is the market start to fail below here, because that would lead me to think that we've got an intermediate cycle high here and that we're going into failure. So that in itself is not horrible, but it just means, I know I'm stating the obvious, but it just means that obviously the near term chances of a rally sort of diminish quite badly if we start to fail below this pivot, because then I'd start to think, okay, well, we're getting a failed cycle, so we're coming in for another intermediate cycle low. So same thing, we just need these supports to hold. We just want the market to get back above the 10-day moving average and clear through this, and then we can start to think, okay, well, are we now building for the next leg of the rally? So looking at UEC, and funnily enough, to my eye, UEC's been the strongest one. So we hit balance last week, but we've settled well away from it again, and price has held up pretty well, even though we've had a lower volume week, but there's definitely been no sellers in here to push it back down. So as things sit, this is okay. This is obviously a concern, and these are starting to turn back down. I'd want to see the market, like I said, in all these things, I'm looking for one more top to complete this cycle, which doesn't mean that the market's going to necessarily crash. But it just might mean that if we get another top here and then start coming off, we'll get a deeper correction. Whether or not that's it, I can't say that. Fundamentally, if you read the fundamental stories, and I read a couple of these things here, they're all still, and you can see here another one of these brokers, I'd imagine that the price target is $6.75, so there's a fair way to go. But once again, I think I'll just let this resolve before map out a possible way it could get to those prices. But this remains concerning. However, the UEC's, to me, is showing some pretty good signs of holding up quite well. Even just here looking at the daily, even the Tenkan-sen and the Kijun-sen have come into balance. So we do want this to hold, but we're still a fair way away from the cloud, and this cloud should provide support. So we can see here that Chiku span's going to run into the candles next week, I'd suggest. So hopefully that will provide some level of support. But it would suggest that we're going to chop. But we'll have to wait and see. But this is pushed back off this low pivot here on the 4th of October. This is pushed back a lot further than any of the others. A lot of them are a lot weaker off the bottom, and this has been quite strong. And so nothing's really changed here in terms of we're holding this zone. We've got another little one forming within the broader area. And we're not really testing it. So we are holding up here pretty well, but you'd probably say, well, this is basically just looking like big sideways chop at the moment, which is why I think, possibly wave 4. But obviously, if these lows start giving way, then, I'm going to have to revisit that view. But we do still have this nice uptrend channel going on here, even though we've only tested the top side once. But we've had a few tests at the bottom here, so same thing again. You don't want to see it fall out of this trend channel. But as things sit, it's still okay. I mean, this is just a snapshot in time. This is just the close on Friday, basically. So anything can and will happen. But for right now, as I can see it right here and now, that's just, it's still in its bullish uptrend channel. Even though we are chopping sideways a bit and it's lost a bit of momentum, there's no reason to think that this is not going to keep going up as long as we can hold within this channel. If we get outside the channel, and we have to start reconsidering what's going on. So as things sit, I mean, I'd still think that this is, even though you've got a lot of arguments to make through here, I still think you can make it into an impulse. This is, as a correction, it's not clear there's 3 waves in there. You can dig it out. This looks pretty impulsive to me, and this would a sharp 2, a big flat 4, that would fit the picture. I mean, the thing about Elliott is it's like, okay, well, I can only go off what I can see right now, and what I can see is that, which would make me think that 1, 2, 3, 4, 5, that would be the probable path of price basis what I can see. But of course, if this all falls over, I go back and revisit. Maybe I'm going, well, this is 4, this is 5, that's it, it's all over, and we're going to come down here for a deeper correction. So it's the same thing, like 1, 2, 3, something like that. And you would expect, if it's going to be a 3-wave correction back against the impulse, you would expect a test back down here between the 50 and the 61.8, which obviously cannot be ruled out, but it's just not my scenario at the moment. Right now, I am expecting another high, but everything can change. It's just what I can see as we sit. So that's just how I sit with UEC. That looks the strongest. And we're sort of, this is also something I'd look at. We just hit 40. I don't want to see the RSI get below 40, because that would suggest to me that once you go below 40, that you're in a more bearish market. The prices have got more momentum to the downside. But what we want to see in a bullish market, I mean, that's one cycle up. We've come down, and we're going to get another cycle up. What we want to see in a bullish market is this to hold 40. If it doesn't hold 40 and starts heading down here, then obviously the cycle has turned quite bearish on us, and we have to just make a decision about what we want to do next. So same thing here. I'm just looking at this Roth MKM. I don't know who they are. I've got to, as pointed out to me, as I've mentioned, I've got to do more research on that to verify that, but they're sort of saying $6.75. So like I said, maybe something like that happens, but I don't know. Obviously, I don't know how we're going to get there, but until this resolves and starts moving one way or the other, then we can map out some sort of plan of how we might expect the market to get there. Now, just moving over here to URNM, and this one's a bit more interesting because we've still got pretty good volume going through this, but we're above balance for now. We're above the 10 cans, and so this remains bullish. I mean, obviously the volume's been tailing off, but this sort of feels like better volume in regards to the rest of what I'm seeing. Like the volumes for a lot of the rest of them look quite weak, but this one looks, like it's got a little bit more going on in it. So remains to be seen, but that is not too bad. I've still, as with all these, I'm still very cautious about this. I mean, that's a red flag that the market has topped out for this cycle. And when I say cycle, I'm not talking about a cycle in an Elliott sense or just in the way that I look at cycles, but it's just the run. It's just telling you that the run is out of gas. So remains to be seen, but that is all. Just I'll keep highlighting that because it is just a big warning sign that this could in fact be a top. Okay, we know we ran into some pretty good zones up here, but we just got to wait and see. I mean, once again, I'm expecting another kick to get maybe through these highs, but I don't know. This keeps me on my toes. Let's just say that. So on a daily, we do have a TK cross here, Tenkan-sen going below the Kijun-sen, which isn't perfect. It's not a great signal. It is a bearish signal. And the other thing about this contract is it did actually slip below this. I mean, it's just wicked below it by 5 cents. So whether or not you can say that's held, I mean, we never closed down there. We've tested it again, and so far we're just holding above it. But I don't know if it's uber convincing that we're going to hold this for now. But the way I'm looking at it is, I'm on the same page here. I'm looking for this to be a wave 4, but obviously it's the same thing. I can't rule out that wasn't 5, that this was a skinny 4, and then that was it. It's still not my anticipation, but I'm definitely not ruling that out. And once again, if we start losing this support level, then I've got to go back and revisit all this and think, okay, well, yeah, maybe we've topped out here. And there are, as I just pointed out on the weekly, there are signs here, and this isn't great that it's lost 40 in the RSI. It's just a warning shot. It makes me less confident about this. I really need to see this push back and soon, or I'm really starting to think, yeah, this is something a bit more major, and that we're set for a deeper correction from the low. So once again, I would sort of think, well, then maybe we're going to get something more like that. We're going to come back right down here. Okay, and then I've got to go back and go, okay, well, this looks now like a completed impulse. What comes next? Okay, so we need to turn around here, and we need to turn around sharpish. Or, I'm starting to come in here going, yeah, well, that was probably it. So, and that's why you can even just leave all the Elliott aside, which I know a lot of you like to do, and just look at the areas of support and resistance. Okay, we hit this, we tagged it. That was a good zone. We wanted to hold this. We haven't held it, but you can see now, and this is another warning shot, is that this is my worry with a lot of it, that we're looking at something like a peak, a higher peak, a lower peak, and it's even though it's not, you wouldn't call it like a classic sort of head and shoulders, it's the same sort of connotation that the market's just failing here at what would be kind of the right shoulder. So this isn't great. The fact that this has come in and just sort of retested this, I'm not massive on this. It makes me pretty wary that maybe this has been the top, and that we are going to actually correct lower. Okay, so we will have to wait and see, of course. The thing is, you look at all this, and you look at the fundamentals of what people are saying, the analysts are saying, and there's every reason to think, well, yeah, I mean, it's going to keep going up. But and that might be the case, but what I'm getting at is that we just might have to endure another big pullback. Okay, so it's up to you about your long-term investing, however, or short-term trading, or however you want to do it. But I would just suggest that the way this is looking at the moment, even though I'm still looking for this to be a wave 4 and we get another kick, this one looks not as productive, because we really need to get away from this zone, and we need to do it soon. Otherwise, this is looking more likely will come down and test back down here into the mid 30s, $30 area. That's how I would read that as it sits. So yeah, I'm expecting another kick, but I'm very wary. Let's just say that. Let's finish off here. Just looking at the Sprott Physical Uranium Trust, and this is still quite bullish, even though once again you can't quite see because this is sort of sitting in front of it. But we had a lower volume week, and it's the same thing. This is concerning, and this turning over is concerning. But as it sits, I don't think we've done enough to break having broke the back. Let's just say like that, having broke the back of the rally. So even though these are sort of early warning signs that we've got to be extremely cautious, and this candle is I mean, it's basically a shooting star. The connotations aren't great, but we're holding for the moment. So we are just on a daily here, just sitting in balance, and obviously this remains pretty key. But we're a fair bit away from that compared to some of the other instruments that we've been looking at. Like even Denison, which I haven't gone into this week, has slipped through it, obviously on some bad news. But right now, just to finish off the week, I mean, you could make a bit of an argument here that the market's just trying to hold on to these level, couple of wicks through here, but it's not pushing away the way you would hope yet. I mean, the fact that we've come back here to the 61.8 of this move down is a little bit. The problem is this would be the kind of area that I would expect just on a Fibonacci basis, and once again, not everyone's into Fibonacci. That's fine. You got to do what you got to do. But that would be the kind of setup I'd be expecting to produce a larger move down. So I remain wary. But just quickly skipping back out here to a a larger view. I mean, we hit this peak here, we just went through that, but we know that the way we went through that wasn't perfect because it rejected very quickly on a big wick. So that remains quite key. We've got another one up here, but that's a fair way away. But, you know, I would suggest that this zone here, even though that is a fair way away, it's just, you know, just look at it. Obviously, I mean, you don't need me to pick these out for you. It's just simple market dynamics. We don't want to lose this. If we lose that, then, you know, we're back into all this horrible 2022, early 2023 chop, you know, and that's not what we want. And that would lead me to think, well, hey man, maybe we've got, you know, the one wave, the choppy sort of triangle, and then that's the three-wave swing, and that's it. I mean, I'm not saying that that's what's going to happen, but that's kind of, I think this is probably one, and then you've got, actually I've got to put this together. I don't really want to go into it in an Elliott sense, just on the bigger picture, but you can just see the connotations of the areas. You just don't want the market to lose that. So we're a fair way away from it, but, you know, we start losing this pivot, well, that just becomes the next spot where we want to test, and then that's, you know, we're starting to look at sub $20 if that's going to happen. So I'm on the same sort of bandwagon in Elliott sense, but I'm not, once again, I wouldn't be leaning into this too. It's just an expectation of what I can see as it sits, but really, you know, maybe this is 1-2 of the next little impulse, but we really need to see something develop soon. I just think that, you know, the longer this goes on, the less chance that this is correct, and that all of a sudden you're back here going, well, maybe this is, you know, you're back here going, maybe this is 3, then maybe this is 4, that's 5, and that was the top. And that we're going to get, once again, you know, we start to look at the deeper correction. Okay. And that, not even from an Elliott sense, it's just the pattern warning that becomes, you know, because maybe this is an A or a B or something like that, and we are going to come down and test back into this zone. Okay, so that's just kind of how I'm looking at it. So a choppy, I think to finish up, a choppy week, I'm still expecting another kick before we get maybe a deeper correction. But, you know, if things don't develop next week, I'm starting to lose a bit of faith, and I'm back here revisiting this. So, yeah, definitely we could have finished an impulse here, and that we're headed for a deeper correction. And, you know, like I said, the geopolitical outlook at the moment is shaky. People don't want risk. That's been shown in the way the bonds have turned around, even though we've had some bad auctions and stuff this week. There's a flight to safety going on, so, you know, people are risk averse. Whether or not that's going to translate to selling in uranium stocks, I don't know. But that's just how I see it. So hopefully next week I can update you with something a little bit more helpful, because there's probably just wasn't much to report on this week. So I retain my view, but I'm probably slightly less positive about it this week than I was last week, primarily because I haven't seen as much develop this week that's sort of solidified what I'm thinking. So I'll maintain it with a lot of caution, because, as I've pointed out a few times, there are those big warning signs on the bigger outlooks here and here. You know, so it's the same thing. I'm just thinking that we do get one more high, but if we do, then I'd be very, very cautious that was the top, for now at least. You know, that just might look, that could just mean that we get, you know, a deeper correction before we go again. That's what that could mean, nothing more than that. But I'm just talking about the near-term prospects of advancement. This is telling me to be very, 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 very cautious about it. Okay, so I'll leave it there for this week. Let's just see what next week brings. Like I said, things could look drastically different on Monday morning. We just don't know what's going to happen this weekend. But once we start getting a bit more clarity through here, we'll have a bit more of an idea. I mean, obviously, just to finish off here, you can just see that you don't want to lose that. I would suggest that is not a good area to lose. So let's leave it there. Thanks again for watching, and I'll see you next week, and best of luck, and thanks for watching. Bye.